So here's what happened. The markets are nervous and had a 7-minute, $2.5 trillion freakout. And here's how to explain this to your friends. So what happened? You probably saw the headlines this morning where the markets are throwing a tantrum again. So what happened? The stocks dropped, the bonds jumped, dollar stores may not even be dollar stores anymore. And yes, it's still about tariffs. So what's really going on? And most importantly, how do you explain all of this to your friends without sounding like you live on Twitter? So let me break down the three quick stories for you. The first one is a 7-minute fake out. The second one is a junk bond scare. And the third one is a $1.75 candy bar. So let's get into it. The most important thing is to start with this story number one, which is the $2.5 trillion rumor rally. Bill Ackman, the legendary investor, floated this idea of a 90-day pause on tariffs, meaning just a few minutes later, the rumor spread that Trump may actually go for it. In that 7-minute window, the markets just went vertical. It was crazy. The US stock market added nearly $2.5 trillion in value in 7 minutes. That's more than the entire GDP of France from just a headline. Then the White House came out and denied it. And they said, nah, that was not going to happen. Said there was no pause and most of the gains just instantly disappeared. Now, here's how to explain it to your friends. It's like when someone yells, free pizza in the break room, and everyone runs just to find out there was no real pizza there. Now everyone's frustrated, and of course, everyone's still hungry. So what really shows this confidence is the fragility, right? It's the fragility of the confidence right now. Investors are desperate for more clarity. And all it took was the idea of a pause to bring back $2.5 trillion. Now, one investor said it perfectly. He said, if Trump just said, never mind, no tariffs, the market would rip to an all-time new high. That's how extreme this moment is. Now, right now, people aren't confident enough to buy, but they're also too nervous to sell. So we just want more of this. Everyone's stuck. Everyone's just waiting. And that's the problem we have. We just need more clarity in the markets. This brings us to story number two, which is these junk bonds are getting spooked. Now, junk bonds are just not super high-level corporate bonds, and it's all about corporate debt. This is the riskier kind of debt that offers higher interest rates. And they had their biggest sell-off since 2020. Interest rates on debt jumped by a full percentage point, which is actually pretty high since what some are calling Liberation Day. That's a super big move, and it's scary for a lot of people. Now, what does this actually mean for companies? So when companies have to borrow at higher rates, the survival of the company gets harder. Cash flow gets harder in retail and autos and like household goods. It's like going from a 3% mortgage to a 9% credit card bill. That's how this works. You can still pay it, but you're kind of sweating on every payment. That kind of spike is like on the borrowing cost is like a warning sign. And we just want to mitigate as many of those things as possible. So the bond market is basically saying, hey, something is off. We got to do something about that, right? This brings us to story number three, the $1.75 store, not the dollar store anymore. And you know that things are getting weird when even dollar stores are raising their prices. Citibank says some locations could bump up the prices to $1.50 or even $1.75. And this is mostly hitting Dollar Tree and stores like that. About half their stuff comes from overseas. Dollar General, as a store is less exposed, close to 10% only comes from overseas. So why are we importing all this much cheap stuff? So it comes down to one thing, which is cost. And we need to understand this, so pay attention. We've outsourced a lot of low-cost manufacturing to countries like China. This includes like toys and cleaning products and tchotchkes and kitchen tools, spatulas and buckets and mops. These are made overseas because it's way cheaper. In the US, we don't make these $1 spatulas anymore. We focus on these high-margin products like medical devices or aerospace parts or semiconductors and things like that. That's where we make our money. So here's the big problem. When the trade wars break out, other countries don't get our imports and they target our exports. So our imports become more expensive. So that's what we bring here. And then our exports get more expensive too. So we get hit both ways. So prices go up here and demand goes down abroad. It's like raising the price of toothpaste here at home while losing your biggest customer for jet engines abroad, right? That's the crazy part. That's why economists say the US may actually may lose this trade war because of this trade imbalance. Because when you're selling the expensive stuff, you probably have the most stuff to lose. Now, back in 2020, when the dollar store prices jumped, most customers didn't flinch at all. Analysts actually think that this may happen again. In fact, the dollar stores might gain new customers because why? It's like simple psychology. When everything feels inflated, when the prices feel high overall, even that $1.75 feels like a win. So uh, here's a mini recap. What do you tell your friends? First, the markets spiked 2.5 trillion in 7 minutes based on a rumor. That means what? That means investors are desperate for stability. Number two, junk bonds rates jumped, essentially corporate debt, meaning companies are paying way more to borrow money, which could lead to cash flow issues, some layoffs, etc. And number three, dollar stores prices are up, which essentially means tariffs are hitting the everyday stuff now. And underneath it all, everyone's just waiting for one thing, which is clarity. Where do we go from here? What is exactly going to happen? So here's the big picture that you probably need to know. Who's driving the bus? First, it used to be the Fed. Now it's the president's next headline. One day you're in a bear market, and the next, the rumor erases all the weeks of losses. Some traders are calling this man-made volatility. Not just a financial crisis, but just kind of like this instability of clarity from the top. They could just message this better, saying that the markets are going to go down, chill out. That gives some investors hope. If a policy shift has caused this mess, maybe a reversal of it can actually fix it. But let's be real. Hope for us doesn't pay the bills. So people are trying to just stay rational, trying not to panic, and most of all, trying not to get fooled again with this 7-minute, $2.5 trillion rally. So what does all this mean for us? If someone asks, what's going on in the market this week, what do you tell them? Here's what you tell them. Number one, a 7-minute rumor sparked a $2.5 trillion rally. Number two, borrowing costs are getting high. And number three, even candy and cleaning supplies are a little bit more expensive. So we need a little bit more clarity. And nobody's really sure what's coming next. So tell your friends so they don't have to read the 12 boring articles behind the 12 annoying paywalls just to get this story.